Okay guys, welcome to today's presentation. This is Jeff here with FX Mindshift. We're going to be talking about implementing the daily bias, okay? And then we're going to kind of piggyback off of last week's lesson and review some of the concepts that we talked about, okay? One of them being the important 3-bar pattern concept. So that's when we have a swing high formation, right? And that's if we have a lower high to the left and a lower high to the right. We have a swing high formation. Right, and then what we're going to do is we look for price to trade through the third candle low on the very next candle, okay? And then that'll give us a bearish bias condition, and we'll be looking to sell at or above the day open price in that condition. You can look to be a seller on that candle, okay? And then based on where the day open price is, you'll be looking to sell at that price or near that price or above it. Okay, and then we would expect the lows of the previous day to be traded through on each candle, each successive candle right following, until we reach a key price level of support, okay, or we form a swing low. All right, and then conversely, a swing low formation, okay, it was just basically just the opposite of the swing high. So what we're looking for is a candle to form a low. We're going to have a higher low to the left, a higher low to the right, okay, and that'll be our swing low formation. Okay, then we're going to look for price to trade through the third candle's high on the very next candle, and then that will give us a bullish bias condition. And from that point on, we'd be looking to buy at or below the day open price. Okay, and then we would expect the highs of the previous day to be traded through on each candle following until we reach a key price level of resistance, okay, or we form a swing high, right? And those are the conditions we look for a swing high and a swing low. So just to kind of reiterate and to refresh so you guys remember, okay, so in a bearish bias condition, we're going to be looking for a swing low, or sorry, a swing high, okay? So we have a 3-bar pattern, okay? This is the high that's created, okay? We're looking for a higher a lower high to the left and a lower high to the right, which gives us our swing high formation. All right, so there's a lower high to the right and lower high to the left. And then what we're looking for is on the third candle's low, okay, this low right here, we wait for this candle's low to be rated on the very next candle. Okay, so we want to see this low being traded through on the fourth candle that appears here, just like that. Okay, and then once that happens, okay, we are now in a bearish bias condition, and we can look for sells at or above the day open price on the next candle's opening. Okay, so we look for the previous lows of each candle to continue to be rated until a swing low forms or a price reaches a key support level. So each candle's low, each successive day will go lower and lower and lower until we reach a swing low or we reach a key support level. Okay. All right. On the flip side, for a bullish bias condition, okay, we want to wait for a swing low to form. Okay, so here's our low, right? Our swing low. We have a higher low to the left, okay, and then a higher low to the right. Okay, that creates our 3-bar swing low. And then, so on the opposite side, we want to look for this candle's high, okay, the third candle's high. We're going to wait for that third candle's high to be rated on the next candle or traded through this high on the next candle, just like that. Okay, so the fourth candle, once it trades through this candle's high, okay, that gives us our bullish bias condition, okay, and on that day, we can look for or be a bear, or sorry, a bull, and buy the market at that price, okay, and look for bullish conditions, okay, and we will be looking for the previous highs of each candle to continue to be rated, okay, higher and higher until we reach a key resistance level or we start to make a new swing high. Okay, so let's look at some examples of that on the chart. I'm going to show that to you right now. Okay, so here what we have is Euro USD on daily chart, right? and we're going to just look at where we can see or spot easily some swing highs and swing lows, right? So if you guys can take a look at right there, obviously there's our swing high. Okay, you can see that we have a high that's formed here. We have a lower high to the right, to the left, and a lower high to the right. Okay, so that gives us our 3-bar swing high pattern. Now what we're looking for price to do is, this is the third candle, okay, and this is the low of the third candle right there. So we want this fourth candle to trade through this third candle's low, which it does right there, right? And that means that the wicks are included in that as well, right? Not just the bodies of the candles, but even the wicks will count. So this candle does that, right? We trade through it, and then we close right here. Okay, we close the day here. Now we didn't close below the low, but we did trade through the low, so that's okay. Our conditions are still met. And on the very next day, okay, we're looking for price to sell off and trade below the fourth candle's low, right? So we can be a seller on this day at the opening price or above it. So you can see price went above it, okay, at a fake rally or fake move, and then we traded lower, okay, all the way down to here, right, below this candle's low. All right, and then we look for that condition basically every day following. We look for the previous day's low to be rated, okay, until we reach a key significant price level of support. Okay, this is a key level of support, right? And why is that? Is because this is where the price turned around significantly, right? So that to me is a key level of support, is also where a previous swing low was formed, right? So we would keep watching price, and you can see that price does trade successively below each day's low, okay, lower and lower and lower and lower until we reach this key support level, this key price level. And then you can see it trades one more time through here, and then we reverse heavily, right? Take out the lows of this candle, and then we come back up here, right? And then what happens after that? Another swing high is formed, right? We have a 3-bar candle pattern here. Here's the high, lower high to the left, lower high to the right, okay? And then what do we look for? In this case, again, we look for price to raid the third candle's low on the fourth candle, which it does right here, okay? And then the very next day, we can be a seller, right? At or above the day open price, okay? So you can see price trades above a little bit, right? And then comes down and trades lower. Next day, comes up a little bit, comes down, trades lower, right? Below the previous day's low each time, right? Comes back up here, trades a little bit higher, then trades lower, and then the same thing on this day right here. So this was the end of the week for us this week on Friday. You can see that this held out pretty nicely, and you can see that each day successively traded lower. And if you were participating in this move, okay, you might have been able to catch and capture a fair amount of pips this week. All right, so let's look at that on a 15-minute time frame, kind of visually, and see that with the daily opening prices. Okay, so this is what it looks like, okay, on the 15-minute chart for those daily candles that we just looked at, okay, for this last week. So you can see here, this is the opening price, okay, denoted by the black lines here. Okay, each of those is the opening price, and that you can see that every time price is at or above it, or just a little bit, okay, then it trades lower for the day. Here it comes back up and nearly hits the day open price, but it rejects and then trades lower. Okay, and then the following day, the same thing. We have the opening price. Price comes up just a little bit above it, okay, then proceeds to trade lower and trade off, and then close the day down here. Then we open lower the next day, okay, so same conditions, right? We're looking for price to sell off at or below the day open price, which it does here, okay, and then same thing here. It comes back up, almost hits the day open price, but then rejects and sells off again, right? And then finally Friday, here we had a little bit more of an up and down, but then you can see it trades down below, okay, then back up again, all right, and then back down, ultimately back down below the day open price. Okay, so in a bearish bias, what we want to be doing, okay, is selling at or above the opening price. Okay, and then what you can do is obviously you want to look for conditions, entry conditions to confirm to take the sells, right? And we might be looking for a pattern, we might be looking for a specific setup. But what we're going to do is we'll take a look at each of these days, and we'll see basically what kind of setups we could have capitalized on those days. Okay, so given that price is fractal in nature, okay, this is the same thing that you would be doing on the higher time frames if you wanted to trade for swing trades, okay, longer term position trades, and then also conversely for scalp trades, if you're trading the lower time frames, this is also what you'd be doing as well, right? So you would be looking at the higher time frames for a higher time frame bias. In this case, we're looking at the daily candles because that's where the institutions are trading off of and keying off of. That's their executable time frame, right? So if the big banks and the hedge funds and the market makers and people that are driving price are looking at the daily time frame to make their decisions, that's in a very important time frame that we need to be aware of. Okay, and that's how we can glean basically the daily bias and know which direction we should be trading, just like this, right? We're looking at the daily opening prices. We have a bearish bias, so every time we see the opening price, we should be looking for some kind of move lower below that. Okay, so let's take a look at that on the 15-minute chart, day by day, each day, and we'll take a look and see what kind of setups we could have caught. Okay, so this was Tuesday. Okay, right after our bias told us that we were looking for sells, right? We had seen the candle trade lower than the third candle's low. The third day was Monday. Okay, so we traded lower on Monday, and today is Tuesday. We're looking for a continuation. So we're looking for price to sell off at or above, or sorry, right, at or above the day open price, right? So the day open price is denoted by this white line here. You guys can see that, right? And you can see that in the Asian session, price kind of holds above it just a little bit. Okay, and then we see that right before London we trade lower, and then we trade much lower into London open. Okay, and then London open we create ourselves a low here. Okay, and then going into London, into New York, we have a little bit of retracement back up. It makes a new high in New York, okay, above London's high, okay, but the high of the day is still up here. Just keep in mind, when I say new high, I don't mean like a new daily high, but I mean a higher high than we created in London, okay, and off of this retracement. And then we had a move lower in New York, okay, a sharp move lower, okay, and that falls in line with our bias, right? If you're looking at this on Tuesday and you had no idea of implementing the daily bias, and you had no idea which direction to trade, you might have looked at this as a W, right? And you wanted to trade this long because you saw this as one leg of a W, second leg of a W, and then you saw a big shift candle, right? This might have enticed you to take a long position, okay, because of this behavior. This is exactly what the market makers like to do, right, to kind of trap the traders when you don't know what's going on. Okay, so if we understand that our daily bias is bearish, then what we're looking for price to do is trade and sell off at or above the day open price. Now this came just pretty close to the day open price, but we had already traded above it earlier in Asia session. Okay, so this move here, this setup here, what do you guys know this setup as? Okay, I'm going to answer for you, obviously, because you can't answer for me, but this would be our ID50 setup, right? You can see here the 1350 cross, okay? Pull back to the 50 EMA, okay? We have a trap of the static 50, okay? And then we have a close of the RSI below the signal line, okay? So your entry candle will be right here, okay? Where the candle closes below the 13 EMA. Right, and that also gives you our TDI confirmation where we have the RSI crossing the signal line, right? And you would put your stop loss right above this high up here, okay? Or if you want to be safe, you can put it above the day open price, right? But we do not want to see price come back above this area right here, okay? And then you can see that price trades off nicely, All right, we have a little bit of a retracement here at the end or the middle of New York session, but then you can see it does come back around and trade lower into the end of the session. All right, this is where you would be looking to exit your trade. You might even want to exit your trade down here, depending on your TP target. But since this is New York session and we're also trading EU, which is right now currently ADR of less than 60, which is a very low ADR. Even for EU, it's kind of uncommon to see it this low. But since you're trading a low ADR pair and it's New York session, you got to understand that the volume is going to be much lower as compared to what you see in London. So your TP targets are going to have to be a little bit lower, a little bit more conservative, maybe 20, 25 pips for something like an ADR 59. You want to choose a TP target that's about half or a little bit less than half, right? So that you can be able to capitalize on the moves. Otherwise, you might see it reverse at, if you're looking to hold for longer, you might see it reverse on you, and then you might get your stop taken out of break even, or you might, if you left your stop, maybe we'll see it get taken out because the moves are so short. Okay, so this is where you'd be looking to exit your trade. Okay, and we ended the day in consolidation. Right now, our overlying premise is still the same. Right, here's our day open price from the previous day. We close the day here. Okay, so the next day we're going to open, the day open price is going to be lower than our previous day's price. And if you look at here, this is the blue tracer from yesterday. This is yesterday's lows. Our targets are to trade through yesterday's lows and stay below those lows, right? So that's what we did. Okay, so that is Tuesday. Now going into Wednesday, what do we have? Okay, so this is Wednesday. Here's where price closed. Okay, well, here's the day that we here's the opening price that we ended at, and this is where we're looking for price to do is stay above or at the day open price and sell off. Okay, so we're looking for price to sell off here, which it does in early Asia, makes a low in London, okay, and then continues to sell off in New York. Okay, so same premise. Here's the day open price. Price kind of trades above a little bit and then a little bit below, and then London makes a low, right? A little bit of retracement before New York session, and then continues to trade off lower and end the day at the lows here. All right, so what setup could we have taken? Well, it's along the lines of the same setup that we saw yesterday. It was also an ID50 move, right? We have a couple touches here to the 50 EMA, right? We have a nice shift candle here, all right? So this shift candle entry would be your entry point to take the trade. We had a shift below the 13 EMA. You can see that the TDI confirms right here. We have an RSI crossing the signal line, okay, to give us our TDI confirmation. Right, and then your stop loss would go just above this high here, or if you want to be safe, as I said, above the day open price, because we really don't want to see it come back above that area, right? So you can see here that price does make a move back up to this high, but it doesn't take it out, right? So your stop is safe, right? So you're still in the trade, and then we continue lower and lower after New York down here. Okay, this is where we'd be looking to exit the trade. Obviously, this would be the end of the session. Okay, and just so that you guys know, this was yesterday's high right here. Okay, you can see the dotted line here of the blue tracer. It was kind of right where the day open price was. So our objective was to trade through the previous day's low, which we did aggressively and very convincingly here. Okay, so here's where we would exit the trade, and depending on what your TP target is, it could have been 20, 25 pips or 30 pips, but like I said, it should be a little bit more conservative for a lower ADR pair like EU. Okay, so here's where you would exit the trade, and then that would be another successful trade day. Okay, now looking at Thursday. Okay, so we have our premise is still the same, right? We did trade below yesterday's low, and we did open lower. Okay, so now we're still looking for price to sell off at or above the day open price. You can see here price comes in the Asian range, kind of toys around the day open price level, and then here we poke above, just above, right? And we have a nice nameable pattern right here of railroad tracks. Okay, we have a hit of the 50 EMA. All right, so this candle right here where it shifts below the 13 EMA gives us our TDI confirmation. RSI crosses the signal line, okay, for TDI confirmation right there. So that would have been your entry candle right there. Your stop loss goes right above this high here, okay, and then that would have been a nice trade all the way down to this low here. Now, granted, this was early, right, before London Open, just before London Open, okay, and then just out of the Asian box. So this was kind of an early entry trade. So if you missed that and you saw this move happen, okay, and then you weren't able to participate in this, okay, you might be asking, well, how could I have capitalized on this move if I didn't catch it here, right, because this was a little early. Now, I talked to you guys a lot about zone flips, okay, and we talk about that in the live rooms, and we also talk about it in the strategy sessions, but I want you to focus your eye to this level right here, okay, where this was previously a support level where price couldn't break through, right, and then we move forcefully down through it, okay, and you can see that this area now that was previously a support area has now become a area of resistance, okay? So price comes back up, trades back into this zone, and then rejects heavily, okay? So you could have taken a zone flip entry right there, okay, where price rejected the 13 EMA for a re-entry, right? But if you missed that, it does retrace back in New York. It comes back up to this high here, right back up to the zone flip area. Okay, you can see all the wicks here and all these small candles here, and price just has a hard time breaking through it, right? So right here, you could take another zone flip entry once it comes back up to this area, okay, and look for price to sell off. Now your stop loss is above this high. Your stop loss is also above this day open price, okay? So either way, your stop loss is very tight. It's not a very big risk trade, and especially because it's New York session, you're looking for low risk, trades at that point. You're not looking for a big TB target, a little bit more conservative TB target than you would for London, say, right? So stop loss above the day open price. This is really only, look at the Asian box here. This is 11 pips, right? So from here to here is really only about 11 or 12 pips. If you want to be safe and put it above the Asian high, then that's only 15 pips. If you're putting it above the day open, that's probably less than a 10 pip stop, and you're getting a great risk to reward on this move down right here. Okay, so a couple of entries there that you could have taken. This was a little bit of a trickier day to trade, Thursday. So, if you didn't catch the trade here just before London, there was a couple of opportunities here that you could have taken as a re-entry trade going into New York, London, and New York session. All right, now let's look at the, you're looking to, if you're taking this trade here, you're looking to exit the trade down here, okay, as we have met our objective of trading through previous day's low, okay, or if you took this zone flip trade in New York, you're looking to exit your trade right here, okay, at the end of the session, obviously. All right. Okay, so going into Friday, right? Friday, the premise is also the same, right? We did trade lower. We opened price lower. Okay, so we're still looking to take sells at or above the day open price. Okay. Now here, going into London, we have almost a touch of the 50, not quite. Okay, so we didn't get a bounce for our ID 50 trade, and that. Regardless, you can see that price does trade lower into London's low here, okay, into the previous day's low. All right, now we're looking for price to trade below that, right? So if we miss this move, we're expecting this to go down lower, so we would look for a retracement before New York session, okay, and then a continuation move lower in New York. Okay, now it does retrace, and it actually retraces higher than the Asian high here and above the open price. So at this point, it looks a little bit scary. You don't really have an entry to take a short up until this point right here, right, where price comes back over the 13 EMA, closes here, and then you can see price trades off very nicely. You might have been wary though, especially since it's Friday trading. This might have been a no trade day, okay? Purely because we've traded back above the day open price and we traded back above the Asian high, all right, you might not have been looking to take a trade here. But if you were, okay, your entry would have been this candle right here, okay, this shift candle. Entry closes below the 13 EMA. We got a RSI crossing the signal line at that point, okay, to give you a TDI confirmation. All right, and then you're also going to be looking to put your stop loss just above this high here in New York that's created, okay? And the premise behind that is because you're still looking for price to trade below this low. We were looking for a retracement in London, okay, to go lower than the previous day's low because we hadn't broken it yet. We just kind of touched it, right, and rejected off of it. So if you were to take a trade at this point, you have to take a low risk entry. And it's going to be where your stop loss is the least, where the smallest it can be, right? This is the point where it can be the smallest it can be because obviously you're still close enough to this high where your stop loss can be still small. If you're waiting for price to go down below the day open price again or trading below the EMAs again, at that point your risk to reward is going to be much less attractive to you. And then a move down to the lows here might not be as rewarding, right? And that might not be enough to give you a one-to-one. So you need to look for price to give you a low risk entry, and this will be a riskier trade to take, okay? And especially with Friday trading, as I said, this is probably just going to be a no trade day, all right? But if you had taken the trade, this is where you would be executing the trade, okay? And you would end the day in consolidation. You can see here that we do close below the previous day's low eventually. Right, so going into the next week, all right, for EU, we're still looking for price to head lower, all right, and our bias is still bearish. Okay, so I hope that was helpful, guys. That's going to be it for this lesson. If you guys have any questions on this, let me know in the chats, or you can private message me, all right. But as I said, I hope it was helpful. I'll see you guys on the next lesson.